Call video for Monday, July 15th. Well, we had a little bit of a consolidation day. Nonetheless, markets are pretty much on fire after Ben Bernanke's flip-flop of him being hawkish to now being back dovish again about his asset purchase program. So now markets are back to buy mode, buy everything in sight with little volume, and markets are totally extended at this time. But let me just run through the numbers real quick. Dow Jones up 3, NASDAQ up 21, S&P up 5, Russell up 3, and we continue to make all-time highs in a lot of these sectors that we follow. Where do we go from here, right? So we want to know what's the best way to capitalize on this type of move, and or if you're day trading. Obviously, we do have some different styles of traders. You would see, and I'm going to show you a 30-minute chart of the S&P, the spiders, and you'll see what the day traders are dealt with, because when markets move right now, since we have really all these markets are trading as one, you have big movement in the S&P futures that gaps up stocks, and then they relatively just kind of stay flat pretty much because you have the summer doldrums of trading. So we have low volume, low volatility, and then when the markets gap up, it's very difficult to find types of moves. And we're going to talk about that in a moment, but I want to show you, go through the indicators, then we'll get right into the sectors. Long term, like I said, I keep saying the long-term picture looks really, really good, and of course with the accommodation of the Fed, the short-term picture continues to look extended. Nonetheless, if we get a type of pullback, I would not mind looking to put on some core positions to hold them for a swing trade for 1 to 3 days, a week or so. It has to be special, like the oil trade, other things of maybe if a lot of market participants or traders they're into options, selling premium is the way to do it. But if you're looking for the day trade during the day, and again, we have 6.5 hours a day, and the market gaps up in front of you, and waiting for that pullback, and it doesn't happen, sometimes you have to close your eyes and look to get in, and that's not the right way of doing it. I'd just rather take a step aside and look for volatility until something like that does happen. But until then, cash is a position. If you feel uncomfortable about it, then that's the way it should be. You should just step aside and let the markets tell you what to do, because it does happen. Things change. Things change really, really quick. When you think that nothing's happening, you'll see that things start to move again. All right, so let's get right into the indicators. And I wanted to show you the McClellan oscillator, which I show you all the time. We are in overbought territory right now. We did pull back slightly, but you see here we're still within the Bollinger Band. Now we're up about 3.5 handles today. I'd like to see this market really entice me to get short. I'd like to see this market run really hard up and then fail, and then I would take an objective short. But other than that, I would not be looking to short the market. Just not the right thing to do here. Fading anything in strength is not good. Okay, take a look at the NASI. This is the New York Stock Exchange Summation Index. We did put a buy signal in last week. So as you can see, we're down at the bottom end here. So we have a long way to go here. And we were oversold on the weekly New York Summation Index. So this really has a lot more room. And I think that it will take out the S&P and take out the Dow Jones highs. I think there's no reason why it can't. We have now buying coming in. We have the summer doldrums of the summer. There's nothing really, there's no catalyst to have this market go lower, except a profit taking some 1 day or two that people come in, take profits, and they just kind of bid them back up again. Here is the NASI. Same thing, we got a buy signal here, but we're at the upper end of the range, staying pretty tight here. So the NASDAQ again got a buy signal as well, and we didn't really dip too far, so as you can see here. So this is looking pretty good as well. The bullish percent SPX gave us a buy signal 2 weeks ago. And as you can see here now, we get that cross, and now we're making all-time highs yet again. And we're not even overbought yet, so the bullish percent does have room to run to the upside. Okay, take a look at the dollar. Okay, a weaker dollar will fuel equities and commodities. Remember that, right? Right now, that's where the relationship stands. We caught the 50-day moving average in the 20. We're above the 8, and of course we're below the 8, and we're above the 200. So I think the dollar can dip even a little bit lower. I'd like to see the dollar come really right up in here. When it gets down to this area here, the 200-day should really catch that. That's where I think the markets will take a breather again. But I think the dollar goes down a little bit more, catches that 200, and the markets continue to take making all-time highs, and then that's when I think we get that sell-off. If that's a lot of people ask me, what do you think? What do you think? And this is what I think. You got to do your analysis off the dollar, and then that's when I think you can actually take a nice little short trade. And speaking of the dollar, right? Let's talk about the euro because they're all entwined here. The euro is at resistance, but I think that the euro can actually break a little higher, get into this area here at 132, right? Right, this gap area of support, of resistance, excuse me, and then start to fail. That's what I'm looking for in the dollar, to have the dollar break down to support, euro get into these areas of resistance right up in here, and then we like to see gold. Now, gold, everybody says, oh, what do you think about gold? And I think gold is in a bear market now. You can see here, charts don't lie. We had that cross. This gave us a cross here back in 2002. So anything back up into this area, 13-ish, 1350, even 1400, I think would be a real good short trade, at least for a trade, and then you would see where it goes from here. But I mean, gold has a lot of work to do. Gold is clearly in a downtrend. Take a look at the weekly chart, as you can see here. So even if you ran back up to 1436, gold is still in a downtrend. 20-day moving average is below. You're below the 50 and the 200. So I think right up in here, you hit that 1321. I'd like to see it get back even up to 1400, and then I would be very interested in shorting gold. I'm not looking to buy gold. Gold as a retracement rally, you had to buy gold right up in here around 1210 to really be safe. So you put that stop just below that wick, but right up in here right now, I'm not looking to buy gold at all because gold is in a downtrend. I like to stick with the trend. Okay, so there's the dollar right now. If you have gold bouncing, dollar coming in, equities bouncing, and then you have the euro bouncing, that's where I think that when you look at the gold with the dollar picture, right, that dollar picture again, getting down into here makes a lot of sense, right? So we can get a breakdown here, and then we can catch that trade, and the dollar starts to revert back up. Then I think that's when you're going to have that good gold, that short trade in gold. Okay, that's going to be the most important one here. And same thing with oil. I don't have a picture of oil today because I would never not be buying oil up here. I think oil can get to 108, 110. That could be the next stop. But then I think that would be a real good spot to fade that big move lower. I think oil would be, excuse me, I keep saying gold. Oil would be a real good buy anywhere back into that 98-ish, even 100 area, if it can get down that area. And then I think oil will continue to make some bigger moves above 110 going into the fall. Okay. Now let's take a look at the VIX, just real quickly. The VIX. VIX very subdued again, no volatility as you can see here, and we're coming back into the lows again, right up into this area of 11.5, 12. So that's somewhere we're going to be looking to watch if the VIX starts to base. Now again, I like to see that symmetry. If the dollar catches a bid and starts to base, the VIX starts to base, and we're at resistance or at all-time highs, and you have the S&P. We're at resistance in the euro, resistance in gold, then that's a good sign that equities are going to start to roll again. And just want to show you new highs, new lows. We dipped below that 500. Now we're back below zero, and we're just kind of chugging along here, guys. This is really good. Again, the longer-term picture looks fantastic. And again, despite the Fed or not, whatever opinions you have to put those opinions aside. It means really nothing in trading. Unfortunately, I don't believe that the market should be up here at all. But again, it's not what I think. It's how we can make money and profit from it, Okay, so this is what I wanted to show you with the day trading. We have moves that we had literally came back down, right? We popped, and now we pop. You see the gap up? Sideways consolidation. Gap up, sideways consolidation. Gap up, sideways consolidation, 2 days. Gap up, sideways consolidation, 2 days. That's exactly what the day traders are dealing with. So it's very difficult when you have a low volatility environment. On top of that, you have the markets gapping up and just consolidating all day, pretty much most of the day. So it's very, very difficult here. You have to really look for that trade. And then when you do look for that trade, by the time you look for it, it's either extended or the day's almost over. So that's the problem that we're having here the last 3 weeks of this move. But again, there is opportunity. You have to just be there, and you have to kind of continue to watch, regardless of how slow it is and how boring it may be. That's the job that we choose, and that's what we have to do. And until then, cash is definitely a position. All right, I'm going to run through these charts. S&P, we're approaching all-time highs here. Another 7 handles, which we'll probably do today. We'll probably break the all-time high from the previous of 1687. As you can see here, we're just literally just creeping up above the Bollinger Bands, and I would not be looking to buy this market here, despite that the market actually continues to move higher. I'm sorry, it's just risk reward is just not there for me. Here's the S&P monthly chart. All right, again, looking at 169.90, we'll probably get that in the next couple of days, and then we really need to reevaluate here. We're well overboard, grossly overboard, excuse me, in all of our indicators on a monthly chart. Okay, not a weekly or daily, a monthly chart. That's something that needs to be, you really need to understand that. S&P weekly chart, again, we took this up back into the band. So now we're in this uptrend channel, right? As long as we hold this uptrend channel, we can easily test the highs of 169.70 and even start breaking above 170. So nothing wrong with this picture, again, other than just that we're now in this overbought state. So here's where I was looking to see if the market stops at 61.8, 76.8, 76% retracement. It has not done so, so we have not gone short, right? We needed that reversal candle, and then the next day break the lows, which has not happened here in the last 13 trading days. So now we're just sitting on the sidelines looking for opportunity, and this is the next spot. Again, guys, the 169.70 here, 169.70 would really push us above the Spider's daily highs. All right, here's a diamond, same thing, but here's where I keep mentioning this, what kind of scares me a little bit here. Little these doji candles, and that's what happens. Look, gap up and sideways. So you could easily tell that from the charts, what we have here. Gap up, sideways consolidation creates those little daily dojis, and really there's no movement here, other than, of course, the morning opening. And here's the transports. Obviously weaker than the other 5 indices that we follow, but again, still not above this long-term uptrend line from November of 2012. I mean, it could easily get there, guys, right? I mean, if we continue to move up and push up, we're going to easily get there. So let's just, again, take it one step at a time here. And here's the IWMs on fire. Now, this is really a bull, a feather in the bull cap, and a bull's cap here. No question about it. When you see the Russell moving up here like this and in this upward channel, that is a good gauge of risk on, meaning that people are comfortable taking on more risk. And when you have this move and you have the Russell following, this is a very good sign, guys, that the markets can continue to grind higher until there's some sort of a catalyst. And again, China, by the way, China did come out with some numbers last night. And so all of a sudden, the numbers were not as hot, and they said, oh, China's, now all of a sudden everybody's talking about China averting a hard landing. Totally not true, not the case at all. Again, that's my opinion. I think that China will be the canary in the coal mine. Unless they continue, if they manipulate their numbers, you're not going to see anything out there like that, right? I mean, if China continues to, says everything is just rosy and hunky-dory, you're not going to see anything like that unless they just totally come clean and say, hey, we have ghost towns all over our country and we continue to build and there's nothing going on. You're not going to see that. So just keep that in mind as well. They're really good manipulating their numbers and keeping their numbers secret on what the true numbers are of their economic situation. Okay, here's the IWMs again. Like I said, as long as it's in this uptrend channel moving higher. But again, you see these little tiny dojis. That's not what I like to see on moves higher, breaking all-time highs. I like to see large engulfing candles, even medium body candles to say, hey, we had some movement here, guys. We opened up here. We're up at these areas. We haven't seen that. Goldman Sachs is real quick on the banks. Now, if yields continue to rise, right? Yields are good right now because people are making money. But if yields start really rising and start really moving higher, that's eventually going to hurt the banks. But at the moment, we're moving up again, and financials are moving with it. That's also a good sign for this rally. So you have a lot of these key sectors. Same thing with the semiconductors, right? And tech. You want to see tech. You want to see banks move higher. These are all cues for the trader to say, hey, you know what? There's no way I'm going to fade this market right now. I mean, like I said, unless you get a real hard run-up intraday in the morning, and we're at these levels, and we gapped up for the last 4 or 5 trading days, which we have, then you would look to fade it. And that's only for a trade, guys. I would not be putting core position short here. It's just not right now. It's against the odds when you have Bernanke flooding the market with liquidity. Here, Apple, give you an example, weekly Apple. Now, Apple here, double bottom, caught the 200-day moving average, and we're just below the 20-day. Apple needs to get back above 435 in order for us to really start gaining momentum and taking out that at least testing the 460 area here, okay? Again, Apple right now is just, to me, dead money until the end of the summer and see what kind of innovative products that they do come out with. And maybe that might spark another rally in Apple. That's possibly what I'm looking for. Okay, but again here, 435 is the 50-day moving average. We need to get above that, hold for a few days to make a beeline shot above the 460 and, of course, 470. And, of course, here is the Qs, okay? All right, guys, that's really it. Have a great week this week. We have full-blown earnings season starting. We started out with Alcoa. We ended the week with J.P. Morgan and Wells Fargo. And now we're head on into earnings season, so volatility will pick up. That's why I keep saying, look, cash is a position. Wait till the markets pick up volatility, which we will. Now we're going to have a slew of earnings, so check the earnings calendar, and that's going to create some volatility for us, okay? Have a great day, and we'll speak to you tomorrow. Take care.